Hi, this is Dave Aquino with Microcont, and this is the free video for Thursday, April 16th, 2015. All right, I want a quick review what's going on in Netflix. A couple of the traders contacted me because they were having some difficulties with the trade that they put on in Netflix. I do know that there are some traders that talk about iron condors at earnings. Now, theoretically, it's a really solid strategy from the standpoint of the mechanics of the Greeks that we use. Okay, the one aspect of trading that is 100% for sure is before earnings, the implied volatility or the vega of the options basically double. And once earnings are released, the implied volatility naturally goes back to normal, so it shrinks by half. So the essence of the trade is that we sell an iron condor or short strikes, and we do basically two credit spreads above and below the current price. Okay, so yesterday Netflix closed at 476. Okay, roughly that level. When we opened this morning, our price was right around 531. So what you are looking at is roughly a $54 move to the upside. Now, if you had written an iron condor $45 away, which was the implied volatility's market maker move, that is a level that most of our people that write iron condors, so that would put this right around 520 there, and to the downside, so $45 from that would have placed you right around 430 to the downside. Okay, so this is where your iron condors were. Now, if you're in a situation in which your short strike is at 520 and 430, and you have a market maker move that exceeds that level, your iron condor is now underwater. Now, give it that majority of the time, anywhere from 70 to 80% of the time, the price stays within these two levels, and you get your premium, okay? But the 1 or 2 times out of 10 that it blows through those levels, you actually have a very serious situation in which you are rapidly trying to recover from this, because this side is profitable, this side is in trouble, and when you get that, you're scrambling to try to see if this does pull back. Now, you could try to trade this intraday and try to make money to fix the situation or roll it back out. But look, Netflix is an example of this is an all-time high. This is an all-time high, and it's pushing through all these levels, and nobody really, you're getting the squeeze of everybody that is short Netflix. You have the lack of people wanting to be bearish on Netflix. So you get not only the fact that we open up at 533, we actually push another $23 higher. If you have a bearish call credit spread on this because of this side of the iron condor and it's pushing higher, you're just hoping and praying, if you're not actively trading this, for this to fall back. And it doesn't look like it's going to, and it doesn't look like it's going to tomorrow, at least to pull back below 520. Not with this level of momentum that you see here and here. So again, the problem that you run into is that the strength of this move does not really abate. It doesn't go away, and it actually makes your position worse. So as a long-term strategy in which you're doing this all the time, you get correct and you get paid 8 times out of 10. The two that make moves bigger than the expected market maker move or the 2 standard deviation move, you're going to run into trouble. And I think over the long term, you can get into some serious risk with a position like this. So that's my 2 cents on doing iron condors at earnings. We actually traded Netflix a little bit on a pullback intraday, but you could have just as easily gone long here. And this trade right here was easily a $1,200, $1,300, $1,400 per contract move just to the upside. So there's lots of ways to make money after you know what earnings are, so you know what to expect. And you can trade what is in front of you instead of just hoping we stay between two levels based on mathematics. Okay? So take that information. Hopefully you'll stay safe the next time. And great job if you didn't take that iron condor, and great job if you traded with me to the upside today. So good luck trading. Thanks for joining me.